let's start. So, welcome everyone to the 13th community call dedicated to Atomica liquidation markets. And today is a good day for us. We won our first 2 auctions today, and profits are not very high. I mean, it's they are very low, but still, it's really cool. And I guess it's a historical moment for DeFi community because it's the first open and non-custodial liquidity pool that programmatically participates in collateral auctions. So yeah, we're I guess our journey officially has begun with this first liquidations, and considering the market state, I mean, for the last weeks, it's more like bull trend, and for the last few months, it's like flat market, so there are not a lot of liquidations. So we are waiting for more good conditions for us to liquidate. So yeah, and as for agenda, it's pretty simple today. Our team, I'll make quick overview about our last updates and what we are working on as for in terms of the next few weeks, and then we can discuss open questions from the community side. Let me start with the updates. So after mainnet release, our focus was on experimenting with different business strategies, and after deploying the new strategy on Thursday, we successfully made bids and won auctions. But this is very competitive and changing market, so we are working on different strategies, and we are prepare like set of strategies for different collaterals and for different market conditions. And also, I mentioned collaterals. It's we are gonna release the support of multi-collateral liquidations. I mean, until now we are able to liquidate only ETH, but by the end of the week we will add opportunity to liquidate VBTC, BAT, Kyber, and 0x. So yeah, and we think that each collateral has to have different strategies, parameters, because of different volatility profile, slippage profile, etc. So this is our focus as well. Also, we understand that liquidations are like the high number of liquidations are a few times a year, and we have to provide sustainable returns for our liquidity providers. So right now we are working on integrating of lending protocol. The first will be more likely compound, and the rates of compound, the rate has grown for the last week, so it will be good. But yeah, it won't be limited only to this lending protocol, and we will add more soon. So yeah, this is our second focus. And also we are working on backstop pools for MakerDAO and other lending protocols, means that the main job and goal of this liquidation markets would be to prevent from a negative surplus of the platform. And it's our little step in our roadmap, and I guess we'll tell more about it a little bit later. So as for the updates and the nearest plan, I guess that's all. So maybe you guys have any questions you wanted to discuss today, or maybe you have questions about the progress and the nearest plans. So go ahead.
Yes, I have a question.
Okay.
Will all the existing collaterals, including the new ones, the KNC, the ones that were just added, will be covered by Atomica liquidation markets, as you said, by end of this week?
Yes, we will support almost all collaterals, almost because if I'm not wrong, maybe Kostya, you can correct me. MakerDAO recently they added this liquidation mechanism for stable coins as well. I'm not sure, but
just on UI we can see that they are in active state. These types of collaterals, but we decided not to support them because of the lack of reason to support stable coins against DAI. So what situations to liquidate them will occur? So we are not sure that it will ever happen.
Yeah, actually, it's sure there are some cases that it could happen, but because for a long time liquidations were not possible for USDC, but right now I guess we have to check this, but all other collaterals will be supported. Renat, that was your question?
Yes. Okay, so basically all collaterals except stablecoins.
Yes, at the moment, yes.
Okay. Yeah, the next question is what kind of parameters will these markets be launched with? How will these parameters be different from the maker, the first market, which is the ETH market? What exactly?
Yeah. Also, it's a good question. So basically, we decided for some time, I guess, not to announce about changing our strategies to see the competition there. But I can tell that right now we changed to more simpler strategy for ETH right now for the specific amount of time before the auction end. We are like bid once for with a discount we can allow at this moment. So that is the strategy right now. And for other ERC20 tokens that we will support soon, we will return to our first strategy when we are starting from a maximum discount and go step by step up to our limit of the minimum discount, and it will vary from collateral, where for example if it's 0x or KNC, where is potential higher slippage and volatility, and more likely the discount would be higher, like minimum discount would be higher, 5% or even 10%. It will depend, and it's very changeable. We have like several strategies, and these parameters could be adjusted very fast, and we are experimenting a lot. So yeah, it will depend on the particular market state and competition side.
Mm-hmm. Okay, thank you. With the last weeks, what were the difference basically? How much collateral, how many vaults are being liquidated for non-ETH collateral relatively to ETH collateral based on the amount of debt? Basically, is it approximately 1 to 1? Is it 1 to 5?
Okay, let me open the stats, but it's definitely not 1 to 1. Liquidation of not ETH collaterals are pretty rare case. For example, VBTC, there were only 3 liquidations up to date, and there was one liquidation of KNC with 23 DAI of that, one liquidation of 0x with 25 DAI of that, and yeah, that's all with these collateral types. Yeah, and to BTC,
Okay.
it's like 3 liquidations for
And a couple of weeks ago, there were also some bot liquidations, but still there were for pretty small amounts of debt. So
yeah,
basically, let's say 90, 95, 98% of all liquidations are happening in ETH.
Okay. Got it. Thank you. Now, another question I have, the research and the plans for adding new markets, non-maker markets, specifically, I heard there was some research done on Aave markets. And what are the main takeaways and lessons learned?
Yeah, one of the next markets we consider Aave, and Kostya, who is present today, did a very cool job of analyzing all the data. Maybe Kostya, you would like to share some thesis or some summary of this liquidations market at Aave?
Yes, sure. I should add that Konstantin Svirsky now is working on research from a technical view to our markets. I mean, how is it possible to create a keeper for them, and what are the possible issues and complications with participating in liquidations. And from my side, I did some analysis, and to start, let's say that these markets are quite incomparable because all the volume of liquidations. So we know that Aave has as a protocol has the basis of ETH behind all its calculations. So the common base for all supported collaterals and borrow coins are ETH, and in general, this market for the last 6 months has reached only about, let's say, 10,000 of ETH equivalent of liquidations. So it's we could see that just in one day, recently at Maker were happening liquidations for more amount. So we cannot compare to these markets, but at the same time, as for Aave, there are also some questions that I can say didn't have such an impact of the 12th and 13th of March as Maker had, but still there were a lot of liquidations during this period. About 1/3 of all liquidations were happening then, and an average amount of liquidations. Yeah, okay. And what about the general data? This total amount of 10,000 ETH was related to just a bit more than 1,000 of liquidations and overall. And so we can see that the size of liquidations is pretty small. And what about supported collaterals? And we can say that the most popular collateral types at Aave are Link, ETH, and Land tokens. In all of them in ETH equivalent, and about 60% of all collateral liquidated was in Link. Then most popular debt that was generated against the collaterals is all in stable coins. There are 5 types of them. USDC, TUSD, USDT, DAI, SUSD. And all of them are approximately 97% of all generated debt. So all that we can see. And for USDC and TUSD, there are about 60% of all generated debt. So just to these coins have the majority of the debt. And what about collateral size? There is also one takeaway that there are a lot of collaterals that with a pretty small size. There are even, yeah, let's say that's less than 1 ETH of collateral about the quantity. They're about 60% of all the liquidated. We cannot call them vaults, but just to compare, the single units of collateral debt pairs, let's say that's less than even 0.1 ETH, they are 60%. There are even 50% of collaterals with amount of less than 0.001, so it's even less. It's about 1 decimal of Ethereum cent. So there is a lot of small collaterals, and the specific of these auctions is that there are 3 types of bonuses that are applied to collateral amounts, and every such and every some collateral types have its own bonus, whether 5%, 10%, or 15% from debt amount.
And what kind of bonus is this?
It works in such a way. So, for instance, as far as we can say, based on our research, that on Aave you can liquidate just about half of generated debt. So, for instance, if you have a debt for, let's say, 100 DAI, you can liquidate on the you can liquidate just the collateral that equals for 50 DAI on this amount. And yes, and for this collateral amount, there are added 5 or 10 or 15% over this generated debt. And for let's say 50 DAI, you if you win the liquidation, you obtain this equivalent of collateral plus percentage from the debt. So, and this spread is a margin that you can earn on a liquidation. And due to the specific that those whose transactions will be the first will get the collateral and this bonus. For this, they ought to pay high gas costs to be among the first. And this is one, let's say, not issue, but a bit strange thing that most auctions Actually, this week I am going to focus on the research of the profitability of these auctions, because most of them, due to their pretty low size and pretty high gas costs, are unprofitable if we take into account the gas spent to win these collaterals. And that's why there is also an issue at Aave itself that there are a lot of pretty small collaterals that nobody is interested to liquidate them. And I need to do a deeper research. And I can say that for collaterals, there are rare cases, let's say, within this thousands of liquidations, only about 2% there were liquidations for collaterals of more than 100 ETH in equivalent. And on these liquidations, you can earn, let's say, some good amount considering gas costs. But for the rest, starting from 1-2 ETH, it's hardly profitable to get a reasonable profit for them. So we can say that more than half, even 70% of these liquidations, if we consider gas costs and possible slippage for exchange of the one collateral, etc., they wouldn't seem much profitable. And to speak about overall system profit during this period, we can say that it was about 600 of ETH equivalent during half of a year. So, and in overall, this market doesn't seem to be most promising about the profits. But still, occasionally, if we manage to win some auctions with a big enough amount of collateral, we can earn something.
Okay, and from the number of participants, what do we know about the liquidation market maturity?
How many addresses participate
Yes.
in auctions? We should ask about it Konstantin Svirsky, because he did some research about the technical side and possibly about participants. I just analyzed collected data from chain, yes, about liquidations themselves, but not about the portfolio of participants and their strategies.
Okay, got it. Well,
I can say if I'm not wrong, there are there were around 116 unique liquidators.
Okay, got it. And with the now this question I will be asking just for as inputs into the modeling exercise I'm working on. What is the total percentage of outstanding debt that was liquidated during the March 12th event in Maker and in Aave for their main collaterals? So let's assume that some collaterals are mature, have a long tail of users, right? Let's say a market is of, let's say, for every 1 million of outstanding debt in both systems. How much of this outstanding debt was liquidated or flagged for liquidation, right? In case of Maker, a lot of people like topped up, right? They repaid and so on, right? But how many were flagged for liquidations and how many were really liquidated, approximately?
About flags, it's hard to say, but about the share of liquidated debt during these 2 days in total debt liquidated during the 6 months is on 12 to 13 March. It was 60% of total debt.
So it's 6K
on Aave, yes.
Yes.
And just a second, I'll check on Maker. Okay, at Maker, it was approximately 1/3 liquidations for these 2 days.
Okay, 1/3 of walls or 1/3 of
1/3
outstanding debt?
of volume of collaterals liquidated.
Okay, 1/3 of collateral, but that means that as far as outstanding debt is probably basically, let's multiply it 1.5, right, or more. That means about half of the outstanding debt was heading had to be raised, right, through liquidations.
Yes.
So basically, if the debt ceiling for this collateral is, let's say, if it was 40 million, if the debt ceiling for DAI at the moment was 80 million DAI, for example, right, then about 40 million of DAI had to be raised through auctions. 40 million worth of ETH had to be sold, right? Because 1/3 of the collateral, because let's say 80 million, that means that there is like 120 at least the amount of collateral, right? At 150%.
Oh, sorry, Rinat. It's 2/3. It's about 64%. I just was incorrect.
64% of what?
Of ETH as collateral, because we calculated only ETH liquidations without BAT.
I see. Understood. That's fine. So 64% of all collateral had to be liquidated, right?
Yes.
So that means approximately 40% of total debt ceiling DAI supply at the moment, that day, about 40% of DAI supply was affected.
Yes, if we divide for 1.5 as threat level, yeah.
Mm-hmm. Yeah, 43 million DAI, which is if we divide it by 80, it's basically 53%. Yeah, 54. You say, okay, that's fine. Got it. Very good. And for Aave?
And for Aave, it's about 70%. Yeah, it's about 60% of liquidated debt, and as overall amount of liquidations, it's about 35%. So average liquidation happened these 2 days was almost double to average in general.
What do you mean?
I mean that size of liquidations was higher than average for 6 months.
It's around like 15 ETH or how much?
Okay,
Average.
if average collateral value that was liquidated was about 10 ETH, so on the 12th of March it was about 45 ETH, and the 13th of March it was a bit higher than 10. So let's say only on 12th of March there was 4 times bigger collaterals that were liquidated for each liquidation.
Okay.
And liquidated collateral as a share of all liquidations during this period was 60% as well. So they correlate a lot. So it was liquidated about 60% of total debt that was liquidated during the 6 months. And the collateral amount was shared the same share.
As in maker, right?
Yes, as a maker and as liquidated debts at Aave. So they have the proportion. So we can say that for some days of liquidations during the period this 12, 13, and 16 of March, that huge liquidations happened at maker as well, a lot of liquidations, and approximately 65-70% of liquidations happened at Aave as well, because it was caused by quick price drops in the collaterals. So for all liquidations, I guess at DYDX would be more or less the same picture, but we should collect the statistics first and analyze it.
Okay, understood. Thank you.
Thank you for question.
Okay, are there any other questions?
The only difference, yes, that I can add about Aave liquidations, that on the 12th of March, about 70% of liquidations were happened to Link as a collateral, but not to ETH. ETH was liquidated in only 20% of cases.
Interesting.
And 13th of March happened like the same shares. It was 34% of for ETH and 33% for Link. So Link is the most popular collateral type at Aave, and maybe due to this, it's more often gets liquidated.
Okay, understood.
Okay. Are there any other questions or topic you want to discuss? If no, I guess we can wrap up then. I think it was interesting discussion, especially in terms of statistics. It's really interesting, and we'll have more and about all the protocols that have this liquidation mechanics, and we will share it to the community later. So yeah, it's really interesting stuff.
Yeah, next week we are thinking about deeper to update research about maker liquidations to have them up to date, because the latest data we have related to the end of April. So as we compared Aave till the middle of June, I guess we should make more or less comparable periods.
Mm-hmm. Okay.
Okay,
That's
then.
cool.
Yeah, thank you.